Welcome to the Meet the Money Show. I'm Dan Barnes, Editorial Director at Markets Media Europe, and joining me is John D'Antona, Editor of Traders Magazine. John, welcome back to the show.
Thank you, Dan. How are you doing?
Very good, thanks. So we've seen some really interesting stuff happening in the US this week. Most importantly, perhaps, is the changeover from the SEC to the Southern District Court of New York. What do you think about what's going on there?
Well, aside from the political intrigue, which is quite interesting in and of itself, the idea of Clayton going to the Southern District almost seems a natural progression or evolution. You've got a Wall Street guy who has been a fan of the street, who also has supported the street, going to the department that polices the street. So while the markets might be a little more favorable to a Clayton-headed attorney's office, the flip side is you now have someone with very in-depth, very astute and keenly aware of how the financial and capital markets operates.
Yeah, absolutely. I mean, he's going to be very good in terms of his market knowledge and understanding, and that court does bring some very interesting, complex cases to the court. So it's hugely important that the level of understanding is right at the top there, isn't it?
Absolutely, it is. I think it works well both ways on the scale. You have, from the public's, the government or the public perception, you've got somebody who knows what's going on, knows how that industry works. And then, of course, from the industry perspective, they may feel they're going to get more of a fair shake because one of their guys is now sitting in the catbird seat, if you will.
Yeah. And do you think Jay Clayton's got a record of being hard-nosed in the SEC?
No, I don't. As a matter of fact, when I was investigating the article that I had written, he's well respected. As he's said to be a moderate, level-headed, and very, very smart. So they don't expect there to be any different weighting between which way he'll fall. He'll weigh everything very neutral and very balanced. And one of the other things that has come out of this development is the name of Brett Redfern.
Yep. So Brett Redfern's been quite well known in the markets as well. And I think it's interesting, just going back to your point about Clayton, of course, one of the risks with this court position is that people might be trying to make a name for themselves. And of course, Clayton's already got his position quite well established, so he doesn't need to do that. Perhaps that will affect the appetite for prosecutions we might see. So tell us about what's happening with Redfern.
Well, if Clayton's been nominated, he gets confirmed, that leaves a vacancy at the top spot of the SEC. And according to everyone I have spoken to, there is no better choice to fill that vacancy than Brett Redfern. You have a man of Wall Street, 10 years at J.P. Morgan, head of their division of trade, their own trading and market structure group. Before that, he had spent some time, he had spent some time on the exchange side, sitting on the board of BATS and of BIDS and Chicago Stock Exchange. So you have someone here who is familiar with the SEC's agenda, knows what they want to do, knows how Wall Street and the broker-dealers operate. You really couldn't ask for a better candidate and or someone to run the agency, the commission, for the next couple of years. Now, whether he decides to leave or not at the end of his term, that's also come up. He might just say, listen, the SEC's been the pinnacle of my career, and I'm not going to stick around any longer.
Well, that's very true. So then going from the real voice of experience that we're talking about there, to perhaps the voice of inexperience, retail traders, day traders have been making the news a lot this week. Can you tell us what's been happening there?
Yes, I can. The resurgence of the retail trade has been documented, and it's just a unique phenomenon that's going on here in the United States. We are still under, for the most part, a COVID-19 quarantine. So one of the things going on here is, people sitting at home, not able to do much. So it doesn't cost you anything to open a brokerage account these days after last year's fee wars between all the major retail brokerage houses, Schwab, TD Ameritrade, all went to zero commission. So, the risk capital you invest is all you're going to lose, not any more commission. So people are sitting back and clicking and They got time on their hands to do their own research, and they're trading.
Do you think there's any risk to day traders at the moment?
Oh, absolutely. There's absolute risk involved here. I mean, let's say right now you and I are sitting in front of laptop computers. Okay, I want to execute a trade on my laptop. I don't think I'm going to beat the market. I don't think my order will front run that of a Virtu or of a high frequency firm. I'll get my fill, but I'm not going to make as big a profit. But there's still profits to be made. And the hidden gem here is you've got all this additional liquidity coming to the market.
Yeah.
Not, where the institutions might be a little more quiet, or let's just say they're a little more reflective in their strategies. Some guy turns on CNBC on their TV, says, oh, wait, the chairman of Boeing is speaking, and he goes and he buys 100 shares. He's adding liquidity to a market, and when it's done in mass, it compounds and compounds. So, when the markets are traditionally slower, like the summertime now here in the United States and probably globally, you're seeing more liquidity. And I also think you can see a little bit more volatility involved, because they're always chasing the market. And, the old adage that some people dislike, but it's true, volatility breeds volatility, liquidity breeds liquidity.
John, that's been great. Thank you very much.
Thank you, Dan. It's been terrific being here.